Good morning, everybody. Welcome to the Place Your Trades Network. I'm Fleri. I've got Aaron with me this morning, and we are going to be talking about some historical delta and how we can use historical delta to trade the event contracts. As always, today's podcast is brought to you by Tradeovate, which has built a custom app dedicated to trading the event contracts. This is what we're all using at Place Your Trades. If you use the link in chat to start using the Tradeovate web app for free, you can follow along with us, make your own picks as well. And just as always, guys, make sure that you like and subscribe, set notifications so that you never miss one of our podcasts. We are now every morning, 8 a.m. Central to about 8:30 Central. And we've got a great team here. We're always bringing some new content. We also have the Sunday night show with J&J, and they're always bringing in some great guests and things like that. So make sure to check us out, guys. And again, we appreciate you hitting that like and subscribe button. But Aaron, man, how's it feel to be you this morning? How you doing?
Feels good, man. How about yourself?
It was good. It was good. I had to pop the popcorn early this morning and watch that CPI print. But holy cow, it's still going.
A little surprised.
So yeah, tough. A little bit of a tough morning to be talking about like what do we think is going to happen for the day after what are we pushing 500 points here in NQ? Getting there. Yeah, so I mean we've got our hands full today, but we do have some cool stuff to talk about. Short of just like what are we going to do today? What do we think the plan is, and what strikes and what trades in the event contracts do we think that we're going to take? But I think a morning like this, a day like this, is a great place to just kind of pause and talk about why these event contracts can be a good alternative to trying to get in here and guess which way CPI is going to go or guess which way the market's going to react on the open to these. So I know you and I had a little pre-market prep, and we took some trades based upon just sort of guessing which way we thought this might work. We'll dive into some of those ideas that we took a little bit, but I mean, what are your thoughts on using these event contracts coming into data events and things like this?
Well, for data events, I think they're great. For me personally, I generally will use them as a binary play. So either I'm looking for way out of the money strikes to the upside or to the downside when I can get them on the cheap for $2 to $3. Looking for a 10x payout on one or the other and closing them out once it's clear, closing out the loser as quickly as possible,
right?
Kind of in the loss and let it run towards the gain. That's generally how I use them for these types of binary events where you're going to get a move. You're just not exactly sure which direction it's going to go.
So more of the wing plays, with the limited drawdown. Yeah, unfortunately, I did the same thing and I picked the wrong direction. I didn't box it. And again, we'll kind of get into what you did, which I thought was really cool, and we'll kind of see how that plays out. But I just picked down and was wrong. So, being wrong, I think it's going to cost me $3. And I don't trade data. Like, I just don't do it. Maybe I'll trade the second move if there's something like very, very clear, or we have like, I think it was last CPI. There was like just this odd opportunity where the market pushed right up into a key level. And I think you and I actually talked about this. It pushed right up into a key level and it kind of paused like a few minutes before the data came out. And I was like, oh, well, this is kind of a weird opportunity where I can have very clear risk, put in some like risk parameters and actually trade this before the news drops, because it came right into one of my levels beforehand. But typically, like, I know I'm not going to make money 9 times out of 10, like trying to get in here and trade this and guess, shorting this pop on the way up, or even like trying to like FOMO it long. Sure, sometimes it might work, but over the long run, for me, it's just not something that I want to be doing over and over again, or just kind of in that game of trying to get this right. So I think the event contracts for me, it's like, hey, I was wrong. I picked short. Let's see if this thing comes in bad, and maybe this 500-point move breaks yearly lows. And there was a handful of things that reasons why I would do that. Putting $3 on a whatever, like a 10-5 no is much different than piling in some contracts, whether you're in the minis, the micros, or whatever, and you get it wrong by 500 points, and that was a 1-minute candle. So Lord knows if stops were hit and things like that in a candle like that. So for me, I think I agree. I think it's a cool way to kind of take an idea, shoot a shot here a little bit and kind of see what happens. But We found out, right? Somebody did. Um, cool. Yeah. So let's jump into this conversation around historical delta um, and how we can use that to trade these event contracts. And so before we do that, maybe I'll just kind of give a little bit of a background of kind of the version of historical delta that we'll be talking about today. I'm sure you could kind of categorize this in a handful of bunch of different ways, but for the sake of this conversation, historical delta is going to be essentially a spot during the previous session or sessions of high delta for that time frame. And so we're looking at it from a historical perspective, in this case for the RTH or the cash session only. And we're kind of marking these spots as a horizontal line on the chart. Like during the cash session, where was the highest delta spot? And you can sort of do this in a handful of different ways. We're picking delta, just like the value of a volume candle, and we're looking at the average volume that it takes to kind of move the product one rotation. But you could be looking at the volume in a 5-minute candle in 30 minutes, whatever you want it to do. The point is, there's some value in trying to identify spots in each of the sessions, looking back, whether you're looking back 30 days, 90 days, 10 days, each of the sessions, high delta spots. And what we can do is I'm going to actually pull up some charts. I've got the event contract app right next to some charts, and we can kind of look at that. Let's go to the side-by-side view there. There we go. And so we're looking at NQ here. And you can see all these blue horizontal lines. And what I'll actually do is let me hide my drawing. So all these blue horizontal lines, the spot where they're coming from, that is the spot in the RTH session that was the highest delta spot of that zone. And then by, sort of like marking this and using my horizontal ray tool, I'm able to identify areas in the auction where there was a large market participant, and delta is created by an aggressive market participant. So there was a large aggressive market participant, or the largest for that session in that area. And so one of the things that I look for is this sort of like clustering of large market participants that are aggressive, that are in the same area. So something like this, where you see, a delta pivot sort of put in here, a delta pivot put in previously in this area, here, and then now yesterday here. And so this cluster, kind of shows us an area where you have large market participants that are able to put in the high delta of the session, that are, doing this in relatively the same spot over and over again. So, that's kind of the framework of what we're looking at. Now, some of the nuance of this is, these clusters can be great spots to jump off for big moves, right? When you see these new clusters formed, they typically are going to be a spot where you're going to have an inflection point. We're either going to go up or down from these spots. And as we saw today with CPI, this new cluster was essentially sort of that spot where we kind of what jumped out from. So, when we talk historical delta, at least for the rest of this conversation, that's kind of the framework of what we're looking at. Just as a kind of a tour here, we have NQ, ES, and again, you can kind of see like this clustering here, RTY, again, nice clustering here, and potentially kind of shooting up into this 1850 area. And then CL, which was kind of a cool one here, right out of this cluster, and then pushing up towards this other one here. So with that being said, Aaron, I know that you use this in confluence with a lot of your work. So, maybe talk about two things with me here. How do you use historical delta in confluence to your existing work? And then, let's jump into sort of that event contracts thing, and then we'll start looking at some of the strike prices and how we can sort of, potentially glean some either destination type trades through these, trading through these empty spaces and voids, which is something I know you like to trade with these, and what opportunities do we have maybe, pre-market today, like you and I were talking with the CPI, and what do we have going forward for the rest of the session?
Yeah, man. So I generally focus a lot on balance, and I find that these clusters often line up with balance highs or balance lows. As you see larger market participants kind of coming in a certain area, that will create the low of a balance zone, or selling towards the high, and you'll see that turn into resistance. So I look for clusters like you're mentioning, but once we break above or below a cluster, I'm really focused on the void, and that in turn can kind of turn into a target, right? So I'm looking for then what's the next cluster above or below if I'm short to target the trade. And it gives you, it especially works well with the event contracts because, trying to do this with NQ as you hold a 50-point drawdown and then it rips back higher and then a 50-point drawdown and then it rips up 75 is quite difficult. But with the event contracts, I find it a little bit easier to just get in, put my target, and kind of let it roll and ride. And then also those areas give me good spots to manage risk, right? So if we break below the cluster that I'm looking at as support towards the bottom of the balance zone, then I'll look for the void below as a possible, almost like using these in a straddle sense, where I'm looking then for it to break all the way down to the next cluster below. So you can use them, the clusters to manage risk, and then the voids more or less as a target for an expansion in the other direction.
Yeah, absolutely. And like that void concept, I think is pretty cool too. So, to kind of come back to that, if we know that we're seeing these lines that are put in these historical delta spots and they're clustering them in the same spot, well, a lack of aggressive market participants or a void also tells you that these areas are areas of low interest from large market participants using this delta theory, right? So the trip through the void, it doesn't always have to be this low liquidity experience, but it has a higher probability for sure. And so like those journeys through the voids, like, sometimes they can be like white knuckle, like you mentioned, right? So if you're in a position, and this is something I like to do a lot outside of even the event contracts, is, if I catch like, let's say I caught a long out of this cluster in CL 8480, and I know that we break up into this void, I'm more likely to try to hold on to that trade and let some runners run through that void, because I know there's an opportunity for this low liquidity sort of like rip through the void. And you see that cluster to cluster trade happen a lot of times very fast, like I'll call it like a fast paced trade, low liquidity type trade, where you're just like going through these voids very quick. So, when you talk about event contracts and we look at some of the pricing, like that's where there's, an opportunity. And I know Horse likes to do this too, where, you don't necessarily have to see this thing to the close, to see that full $20 reward for your risk. You could buy a strike on the other side of a void here, and you might be able to pick that up for $2 or something like that. And on the journey through the void, that thing goes from like 2 to 8, and it doesn't even have to get all the way there. And so I think, that was kind of a cool opportunity that we saw this morning when we were kind of doing our prep, which was pre-CPI, right? So we didn't really know what we were going to see here. And so what I'll do is actually on the left here, you can see I have the Trade-Evade app. So we have ES and Q, we've got the Dow, and then we've got CL here as well. So we'll just jump into CL, and you can see they kind of give you this cool chart. You can see where the strikes are and all that good stuff. You can also just sort of like go through the strikes here at the bottom. But I think, with the side by side on the chart, let's pull up the strike list and see what we see here. So one of the things that we recognized this morning, and I thought this was a cool trade idea, Aaron, is you took sort of like a straddle, correct?
Yeah.
Based upon these clusters. So we had a cluster here, let's just call it like 84.5 to 84.80. And we had a strike, at 84 that was a pretty good price at the time, right? I think you got what, like $3 or something like that?
Yes.
On a no. So you got a $3 no. And at the time, price was like right here. Like it was, relatively close to that area. So it was, pretty good deal. CL moving only $1 and some change, 100 plus ticks. And, again, like you mentioned, if we break this cluster and we go into this void, the chances that we come back and or that no strike is in the money is pretty high, right? So you had the 84 no, which was right on this cluster, and then you had a big old void up into this 87.80, 80, 88.30. And the 88 strike on the yes was also relatively cheap. I mean, for pretty reasonable reasons. I think we were trading like 85 quarter at the time of the conversation. And so you took a yes on that, basically creating like a straddle, right?
Yep.
and you got the entire package of that straddle for about $4, I want to say, on the pricing this morning. And on CPI, we popped up and we didn't quite get all the way through that void, but we went from like 85 to 87, 87.40-ish here. So we went 200 ticks up. You know, pricing is a little laggard in some of these events, to catch up, but you kind of have a cool trade opportunity set up. And again, the cost of executing this thesis in the event contracts versus, risking a 250 tick move in a matter of minutes, at $10 a tick in this contract. It's kind of a cool thing, right? So like you can sort of like start to build some of the confidence to this. So right now your pre-market CPI move was basically a cluster to cluster trade using this historical delta, and you also had what you had like a balance area low kind of in this area as well, right?
Yeah, there was a balance area low down there, and also that 88 level, so just above 88, I believe, right near just below 89. I have it up on my chart. 88.48 is the 90-day point of control. So just above that is kind of a natural potential
magnet
target
as well, right? Yeah.
So
kind of a cool trade idea. It didn't quite get there, but I mean, obviously, we still have the entire session, right? And you've got sort of these key areas of interest that you're looking for one side or the other to break. And again, as you look at these strikes, so the 88 strike, yes, $2, and the 84, no, $2. So, right now, you can kind of put on this trade idea for, $4, and only one of them has to go, to like, and this was the conversation we had, is like only one of these strikes has to go, towards its, area. Obviously with the setup like this, the worst thing is if you just park it in the middle, right? So you're looking for a break of these clusters, right? And that's kind of the way that you've expressed this thesis, by taking an 84 no and an 88 yes, which again, kind of a cool opportunity. I went the other way on my guess, and I was expecting a big move off of this 850 cluster, except for I was expecting the big move to go the other way, or just speculating that the big move would go the other way. And so I took, and let me pull up the NQ strikes. And so here we'll pull up the NQ strike list. So here you can see we had sort of the settlement strike right at 10,800, which gave you like a really cool like sort of middle ground. So 2 strikes out is usually a pretty cheap price. And so the 10.5s, I think, were like $2.50. And so 10.5 would have been basically like, this is our cluster jumping off point. It was a new cluster, new historical delta. And typically you'll see that big move was looking for a 300 to 500 point move off of the CPI print. And, we got it, just went the other direction. So I think I took 10.5s. I probably have about a 0.01% chance, but again, you could still buy those for 50 cents right now if you wanted to. I don't think that's even the 10.8s right now, only a quarter. So, but to be wrong, I think cost me like $3 or something like that, right? So again, kind of a cool way to kind of see how this would work. Now, had I gone the other way and we look at some of these clusters, right? So this 121 cluster has been huge throughout this whole sort of like larger accumulation zone. 121 has been a big jumping point. So that would have been, if I was taking this thesis to the upside, 121 would have been sort of like my straddle. I probably would have done like a 121. So you would have had to do like the 11,000 yes and like say the 10.8 no would have been kind of a cool version of that, breaking both sides of these. The 250 yes would have been a nice, sort of like topside 2 strikes out guess, right? So I took the 2 strikes out no going down. Had I taken that bet going up, 2 strikes up would have been about the 250, and that would have been a pretty good one as well. And you can see this 250 cluster is where we paused, and now the next cluster up is this 11,450. Now we do have a strike here. You can see that's 11.5, and that yes looks like it's teetering between $3 and $4. So, if we looked at what would we do sort of going forward with this, now we have sort of 3 key strikes in NQ, and I'll just kind of like I'll look at NQ as sort of this idea here. So we have this 450 to 439, which is like an FOMC cluster. There was a cluster put in at the spike of FOMC. So maybe a yes above there. And then 250 is also this cluster that was kind of the top of this zone here and the base of the FOMC spike. So essentially what we could do is, excuse me, essentially what I would think to do here is we could look for an 11,250 no and an 11,5 yes. Right now you could get those for about $10 on a 2-to-1 and see if we sort of break either of those areas, or we just pick a side, right? I'm more of a let's play this fade back move. So I would probably look for like an 11,250 no, and look to get that a little bit cheaper. So that's probably what I'll do is I'm gonna play the break back into this cluster, this 11,250 cluster, and I'm gonna look to get this a little bit cheaper. So I'm gonna try to get these for $5. Here you can see these no's right now are trading for $7.50. I'm going to try to get these for $5 and see if I can take them from $2.50, and if we can retest this 121 key cluster. And I'll look to cover those no's into this 121 key cluster. So that'll be my post-market idea using this historical delta. What markets are you looking at, Aaron? Are you going to just ride out the CL trade? What do you got?
I'm going to ride out the CL trade. I'm looking at the chart right now, and it's starting to break down. So there's the potential that this thing gets down to that 84 area, starting to break below yesterday's low. So it's looking like it's reversing. I had an opportunity to get out of the long side of it at 100%, but I didn't take that. We were on the call, but I think I'm going to just ride this one out and see what develops. If ES pulls back, I would consider taking that to the long side. It's breaking out of a pretty decent downtrend, and I think this number was a surprise for a lot of people, a lot of market participants, even especially the larger ones were expecting everything I was seeing was saying we're coming in hot, and we came in cold. So
we came in hot.
A lot of people offside. So if this doesn't pull back, anyone that was positioned for that move lower is going to be forced to cover because that's where we get the squeeze coming from. So
they'll be making some delta late in the day.
Yeah, I would love to see a retest of that 39.20 to 29 or 39.20 to 39.25 area in ES. It's been really stubborn resistance for almost 2 months now. So I would probably switch to ES if we can hold these gains at the open. I think there's going to be a lot of larger market participants that are going to be forced to cover.
I like it. I like this 84 no too. I might have to jump on that with you as well. That 84 no, $3 and some change right now. And before we close up, I want to touch on one other thing that you said that was kind of cool. And we're getting into a little bit more of an advanced, event contract things. But this is a great, sort of avenue to test out some of these, more traditional option type strategies. You talked about legging out of part of your straddle, and there was a point in this trade, probably had we not been kind of on our pre-market call and on this podcast here, where you could have closed out the top edge of your sort of thesis at break even and kept your lower strike and sort of like shifted that bet to one side or the other after getting the information from the CPI print. So kind of a cool little thing there as well. But I'll probably jump in that 84 no with you as well. I like the idea of let's see if we can break that cluster down, or at least come back and test it, right?
Yeah, even if it comes test it, I can get out of the trade with a gain. And if it runs through it, I would still look to probably almost 10x the initial trade.
Yeah, really cool idea there. It was cool to watch that kind of trade play out there. So just a kind of quick recap here. Historical delta, it's a magnet. We have these voids that are sort of these vacuums where we can trade through quickly. When those line up with some of these strikes and a trade thesis or a news event like we had today for CPI, it kind of gives you a little bit of an area of interest. And if you know that these areas, these clusters are magnets, Well, if one of your strikes is a magnet and price gravitates towards it, and you can get it at a pretty decent price, and you're familiar with the pricing structure of this product, as price comes closer to it, when we get close to these strikes, NQ, I know that we're going to be priced somewhere between like, $8 and $12, right? So if I can find a 2-to-1 trade in there somewhere, or even a 1-to-1 trade, there's some things that you can do using this historical delta to really, scrape some edge out of these event contracts. And again, with a day like today in CPI, you can have some skin in the game. You can, pick a short, be wrong, and have it cost you $3 versus 3,000, which, would have the other direction on a 500-point move. So again, Aaron, it's always a pleasure, man. It's fun to talk about this. I know you and I kind of are use sort of a similar version of this historical delta in our daily trading. So cool to kind of bring that into the event contracts thing. I want to say thank you to everybody who's listening and joining us today. As always, guys, please hit that like and subscribe button. Subscribe to our YouTube channel, and make sure to follow us on Twitter. We are on @PlaceYourTrades. You can also head over to @placeyourtrades.com if you want to have a chance to win our weekly giveaways. We've got cash prizes and all of that good stuff there. So head on over there, sign up for our mailing list, join us on Tradeovate, and giving these event contracts a shot here. If you are going to do that, make sure that you use our link. And again, we just appreciate you guys joining us, and smash that like button, subscribe, hit notifications so you never miss a podcast every morning with the Place Your Trades team. Aaron, good luck today, man. Always a pleasure.
Thanks for tuning in, guys. Have a good one. Thanks.
All right, everybody. Take care.